Okay, good morning everyone. So today is Wednesday, July 9th, 2025. And we got some things going on today in the market, so it's always something's happening. So we're going to be looking at it today, see what trades we could find. Um, if you were here for yesterday's stream and you saw that we were calling for Asian lows to be hit, and then it happened, um, that was not random. You really think the markets are random? Because everything's already calculated. The open, the low, the high is already predetermined. It's just a matter of getting yourself aligned, making sure things are, um, yeah, it's just a matter of making sure you're getting aligned with the market. That's all. I'm not saying that I knew it was going to go there. I had a gut feeling because I'm still learning, but the more I practice and the more I see this come into fruition in my own hands, the more I will gain more confidence in learning how to read this price action correctly. We saw the possibilities of where it could go to. The part where I still suck at is projections, because there's a way of projecting the market, and there's so many ways using blocks, using the daily range, using open float, eight sessions, multiple sessions even. It's just a matter of being organized to that extent. Let me just focus up here real quick. Okay, I'm just gonna do this. Okay, and then so when I'm live streaming, I'm also doing other things on the side as well. So that's why I do apologize if I do end up going quiet at some point. Just want you guys to understand that. Other than that, you know, market's been going great. It's been trading up to levels that I've been anticipating. And for example, right here, we zoom out for a bit, go to the 15-minute. You see that we've used the pre-market 6 p.m. from Tuesday's buy-side liquidity pool. That was traded too around London lunch. Same thing could be said for PM sessions by liquidity from yesterday. That was tapped this morning at 7:30. And now we're looking to see if yesterday's lunch high could be hit, or even Monday's buy side liquidity from the AM session. Okay, so I just wanted to go ahead and show you that. So we had the pre-Asian highs taken and the PM sessions from yesterday. So some new lows that were formed were the London lunch lows that I'm anticipating for it to be taken as well. If we're going to be seeing sell side delivery, I really don't think so, at least because everything that's pointing towards right now, it's looking bullish again. And on top of that, not to mention, we also have FOMC later, so be on the lookout for that later today. Um, Daydreaming, no, not daydreaming, but ideally, what I want to see is just continuation. Very little retracement, very little manipulation. I really just want price to pierce through all those old highs, right? Because we have those two highs stacked. We got the open float, right, from Monday's high. And then we have the external range liquidity line from Friday's high. Just because that's what we want doesn't mean that's what we're going to get. So, because again, market moves, you know, between sessions, and sometimes the real players come in. The head shows up, and they're like, "We're gonna play with people's emotions today," entice them to think that it's gonna go higher, only for them to pull up some kind of distortion, and then it reverses, it goes the other way around. I believe that's what happened yesterday, because yesterday's low were so obvious. Well, not obvious, but they were looking very high probability. But once they pulled up this candle and dipped back down again, I thought that we were going to see even lower prices, but no, it just stayed consolidated here. So let's see. Okay, I'm gonna get my things ready here. Alright. So that's what we're seeing at the daily. We're seeing that this liquidity that's left to be taken. Just gonna be anchoring myself here. I think I saw a dealing range somewhere here. Ah, yes, here it is. So we'll mark down to these lows. There it is. So this is what I'm going to be referring to today. Now, something that I've been back testing as well is the use of this old liquidity. Like, why is this important? Well, it's important because it highlights areas of liquidity where we have yet to travel towards to. So we can use this as potential take profits or potential targets if you are in a long and you don't know where to take profits on. Refer back to session liquidity. So that'll be one of the ways that I'll be using this buy side liquidity here. Or it can be set towards SMT. Yesterday, what we were doing was comparing the highs of what happened. Remember, we were comparing the pre-market session, and then it made that high, I believe, on futures, but it made a lower high on CFDs, and then it sold down. I would have to refer back to that video, but yeah. So we were using that as a form of SMT as well to compare the highs and how it was tapped, and it gave us an insight of how it's going to travel down lower. So you see that we'll keep going upwards now. Okay, we have the 12 a.m. open. Notice the dip below it. Open, low, high. Accumulation, manipulation, distribution. So again, right now, getting in on price, you kind of would be considered chasing price. So I would like to wait for it to dip down into discount first before it keeps going. It could just keep going up, and you just let it go. Look to something else, right? But right now, since I'm so focused on futures, I really just want to focus on either MNQ or ES, but mostly MNQ since I like the way it moves. Let's see. Take a look at the dollar. We look at the daily chart. See that it's still recovering. And why is that possible? Let me give you a little insight about what I've been looking at in terms of bonds and interest rates. So this is the 10-year bond, and I'm looking for the bonds to reach into an area of discount, probably treat this low as turtle soup, and then expand higher, because right now they're like in a bullish sentiment, I still feel like. So I'm looking for this area of from this high to this low. Notice how it hasn't quite met that buy side delivery. So one way that it can get us up to this external range liquidity is by going down to discount first. So I'm using this dealing range from low to high, anticipating for the bonds to dip down lower here, only to go up. So if it's going to do that, that means bonds are going to be decreasing its value in the short term, which means what? Opposites looking for the interest rates. So this is the 10-year yield, and we're looking for price to keep going up higher. This is total soup at this old high. Same thing. We're looking for this low to get filled. So if it has to do that, first it needs to go to premium before it goes to discount, right? So it's going to go up to premium. I'm anticipating turtle soup here again, dip down lower. If this is going to keep going, this rally, then what do you think is going to happen to the dollar? Let's go back to the dollar. I'm anticipating it for it to go up higher. How high? Who knows? Maybe up to this high up here, medium threshold, back to the opening price even. Just areas of places where we can anticipate it go up before it keeps going down lower. So if that's going to be happening, right? The dollar's going to be rallying up. What do you think is going to happen to the stock market? Well, like I said, if dollar's going to keep going up higher, this could be for a risk-off scenario, but it doesn't mean that it's going to be strictly, negative for the market. If dollar rises, ideally we would like to see the stock market fall, but if the stock market, but the stock market can still potentially create higher highs despite dollar going up higher as well. They can still move in tandem. That's also a possibility. But if it does that, the stock market will be moving higher, but just with some jaggedness, if you will, going upwards, right? Because there is some form of resistance factor coming into play because of the dollar going up. If the dollar was going down, I mean, it'd be easy, straightforward. You'll probably see low resistance liquidity around conditions of the stock market, just no problem going up. But since they're moving in tandem right now, the stock market can move a little bit more jaggedness. And that's just through my back testing and just experience of learning about, the guy himself on the internet. So let's see here, we have this high. We have our daily range attached. So notice where we're anchoring our fibs, right? 25% low, 50% high. That's interesting. Looking for price to dip down to TO GMT. What's going to cause that drop? Well, that reaction to that Tuesday lunch. So let's take a look at the reaction that we're having today. So what did I say yesterday? You can use the futures contract versus the CFD to get some form of S&T. Hold up, get that going for you. See, we're having that dip high. If we also compare it to the CFD of the S&P 500, US 500, see that we're also moving in tandem. Low, high, from this high to this higher high, from this high to this higher high. So they're moving precisely how they should be doing. What's another way that you can compare? Another way you can compare is by comparing the CFD versus futures, but right now, because futures have a 10-minute delay, I'm not able to see that 9 o'clock candle just yet. I don't think it's... Oh, yes, you can, sorry. Let me look at that up. So we have a low, lower high. Okay? Low. Let me look at this again, guys, just to make sure. Let me look at this here. We have the high formed at 9:10. That's good. Look at 9:10. See that? So we have a low high. Yeah, high, higher high, 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 higher high. So we're gonna moving 10. We're seeking to anchor this. If we're gonna go lower, right? We're seeking to anchor this dealer range as high to when there's a cracking correlation via, you know, via liquidity or an inefficiency. So right now we have liquidity. Looking to see if an inefficiency as well. Let's see here. So if you're watching this live stream, welcome. Thank you so much for joining me. I'm going to be talking to you guys about where to find a good inefficiency that can potentially guide us into taking price towards external range liquidity. So what do I mean by this? If we zoom out and look at the structure on the daily, right? You'll see this high to low, lower high, lower low. Like this to me, it's a implied mitigation block, failure swing. So it's up here, high, lower high. And we're looking for price to, once it opens at midnight again, we're looking for price to behave in a way where it fills this gap from, not gap, we need to make this balanced as soon as possible is what I'm trying to say. So from this low onward to external range low, it needs to fill quickly for it to prove that this structure is true. We're not seeing that right now. That's why I'm still bullish, because it's going against the narrative. Okay? Through my back testing, when this kind of formation occurs, I'm looking for price to expediently go lower. But since it's not been doing that today, well, it's been reversing. So what do you think is going to happen? It's bullish. Bullish. So one way I can look at the best efficiency is comparing the 20 U's. So we have here 0, 5, 10, okay? And then we have 0, 5, 10. Excuse me, 0, 5, 10, 15, 20, right here. And then from 0, 0, 5, 10, 15, 20. So I'm going to be looking at this structure from this high. Let's see this. We have a high, low, lower low, higher high. So we have this whole entire dealing range from this low to this high. So in this case, I don't see from this low to high, this dealing range, we have to see an inefficiency. Sort of like this CIVI. Look how it's been reacting. Let's mark that just in case. Okay, no problem. and it's going to be used this 5, 10, 15, 20. So from here. There you go. So this inefficiency will be relative moving forward. But unfortunately, it's not somewhere that's premium right now. I would have loved to this have been premium, but it's being used as discount. So let's see if there was some way that we could have used this to see if we can make higher prices. See that? No high. No. Everything's moving just right here. It's hard to find an argument today. That supports our case, right? That's why I'm like holding off right now. Let's take a look at. Oh, see that? Look at that. So this is the most up to date current. So we have the US 100 right here reacting in such a manner. What did I say, guys? It's going to tap this liquidity, right? Monday's buy side from 9:30 open and lunch. Tuesday's lunch. There was a bunch of other buy side liquidity pools, and it's been taking them bit by bit. I've been seeing this since like 6 a.m., 8 a.m. Just how it's been taking higher highs. So this is good. That's what we want to see, right? See that? So we're even to the point where we're taking out buy side liquidity pool Monday. Not even taking the external range liquidity. See, that's what we were aiming for too. Right? If it's not gonna fill, you know, this low to this lower low, and it's reacting this way, where do you think it's going? Up here. That's good to see. So we'll mark this up and see how did the S&P, the US 500 react. Yeah. So are we seeing price rally up higher? Yes. We're still aiming for those Friday highs. That's where I'm ideally aiming for. I'm afraid that if it just keeps rallying up, it's gonna be another day with no opportunity to get in. At least for me, of course, because like I don't. I've been burned so many times trying to chase price. There is a way for you to get in as price is developing higher highs, and that takes like a great form of conviction. No, not a great form of conviction, just confidence. Because if you see like a fair value gap, you're just going to assume that it's going to get, immediately rebalanced and then just keep going up higher. I haven't experimented like that. Like I know that's a possibility, but just this is what I mean by being a trader. It's a different skill than trade analysis. Because even though I feel like I'm getting better at analyzing, being the trader, being the executor, it's still difficult for me to accept that kind of trade going in. Because what if, right? What if it fails and it stops me out lower only to go up to my direction? That has happened to me many times, and it has caused so much scar tissue that now getting into that kind of trade again, um, it's a little nerve wracking. I'm not gonna lie, but the more I get better at this, the more I gain confidence in reading price. That's where I feel like I'll make sure to get in. But right now, that's the kind of condition that I see myself in, and it's not good. Um, so that's something I need to work on. So I'm sure there's some. I'm not perfect. I'm not the best trader, but I'm giving it a shot, and I've been giving it a shot for almost a couple of years now. So this is not, it takes a while. You're playing in the field of the most smartest individuals, and now you got AI here as well. So it's definitely not an easy task. I would definitely give yourself a pat on the back if you're in this, for a couple of years already, and not have given up, because this thing is hard, man. And there's a lot of things you have to wrestle, not just with what you see here on screen, but what's in between your ears. There's a lot of wrestling involved. How much am I risking today? Where am I going to get in? If I get in and it loses, will I beat myself up? Um, or if I get in, it stops you out, and then it ends up going into your predetermined direction, will you still beat yourself up? Like, will you feel much worse? The whole experience overall, once you log off from your screen, or how are you going to be treating yourself after you log off? That's what I'm trying to say. And for years, that was my biggest challenge. And I still kind of feel it today, actually, where I log off, turn off my screens, go out, and the whole day my pride and joy is gone. It's drained. Not because I lost money in the market, but because I didn't make any money today. And despite my analysis being correct, the fact of the matter is I didn't get something out of it, like monetarily. I feel like my whole day was wasted. And because my whole day was wasted, it felt like it just wouldn't make me enjoy my day. And I would go the whole day thinking about what if, or I could have done this, or I should have done that. And instead of just living the now, and enjoying the moments, like it'd be someone's birthday party, for example, and I would be missing. I'll be there physically, like present, but my facial expressions and everything is just gone. I would not be present in the now, I would always be thinking about the move that I missed or the move that stopped me out and then it went into my direction. See, this is what I mean. It's mental draining, and you can't be putting yourself in that kind of environment because when the next day shows up and you carry that baggage over the next day, it's going to totally affect the way you interpret the market. And price is just going to be doing what it's coded for. And if you bring in the baggage the next day, imagine how challenging that is to enlighten yourself from that. And on top of that, if you're a coffee drinker, if you're a, you know, drug taker, uh, think about how many more external factors you bring it into your mindset. It's a mess, and it's no wonder people blow up in this industry. Uh, or like they get into these crazy trades, with the 10 handle stop loss, and it goes into their favor. It's all euphoria, man. That's like natural. How can I say? Uh, that's like natural excitement coming into your body, and you're indulging it with more caffeine, a stimulant that gets you up, uppies. It's like uppies to the second power, to the third power. It's crazy, and then you wonder why your blood sugar spikes. Blood sugar, your stress, your endorphins, all that crap just starts acting in this irrational way, and then it causes a stressful life, and then so many things happen. I just have to quickly check on something, guys. I'll be right back. But let's take a look at if it will reach up to this external range liquidity. Okay, one moment, guys and girls. Okay, guys, I'm back. So sorry I went off on a tangent there. So we still see price waking up higher to higher prices. Let's take a look at the opening range gap, electronic trading hours form. Remember what I was telling you guys? There has to be some form of variant where it involves the electronic trading hours because we've been getting new day opening gaps, new week opening gaps, and we're always being provided regular trading hours variant and external electronic trading hours variant. So I just put the pieces together and I have a working theory that's like, well, if there's an regular trading hours variant, there must be an electronic trading hours variant. See that? Now in the delay data we're showing buy side liquidity being rated. Okay, so let's go over here. This is my folder for that. And this is what I was looking at. So here we have the close and then the open. And so compared from this high to this low, is the opening a premium or a discount? It's a discount opening. So if it's a discount opening, I'm seeing this kind of like a SIBI, sell side imbalance, buy side inefficiency. So what does that mean? When price went up here to reprice, look at the bodies respecting the upper quadrant. So that's a good SIBI, right? If it's going to be a SIBI, we anticipate price to sell lower. It did. Got Asian lows, and it almost tapped the AM lows from Tuesday. And what? Started reversing. Closed up higher, challenging the narrative again. And remember, once we had open midnight, we were anticipating price to quickly fill this price lower. But look at this reversal. Look at the swing low. One, two, three. And look at how it expanded here. Closed above the upper quadrant again. Repriced lower. Okay. And then all of London session, we've been consolidating up here until we wicked above it. Okay. So the moment it did this buy side delivery to the sell side delivery on this SIBI, sell side imbalance, buy side inefficient. Once it made this buy side efficient. Okay? And when it made this, it's sell side balanced. So this is considered now a rebalanced fair value gap. So what if it's rebalanced, this low should act as an intermediate low. And when price started to do this, again, we're anticipating price to go up higher. We're looking to see what form of discounts were tapped. And look, it's traveling down the lower quadrant, wicking down, wicking up, wicking back down again on the premium side of this gap here, the wick, and then expansion up higher. And it was using these levels inside our electronic trading hours gap. And again, I'm not here to teach. I'm not in the business of teaching right now because take it at your own free risk. Whatever I just said there is either to the T to what we're being taught or not. I could be totally wrong. It's like just beware. That's what I'm trying to say. It's like we're in the classroom. The teacher gave us all the notes, but you went missing because you were absent, and now you're coming back to school, and I'm giving you my notebook. So you're only going to get notes based on my interpretation of what's been taught, what's already been taught. And sometimes you can copy off the wrong student. So that could be me. That's why I don't want to see myself as someone who's an educator. I don't want to see myself as someone who's like, you know, uh, a wannabe next, you know, what's that called again? Mentor. Like, I'm just trying to get an A plus in this class. And my kinds of notes are the notes that I've been using for my reference. So beware of copying someone else's methodology, like at your own risk. Not only will you be possibly getting incorrect, misleading information, but you could also end up spending time as well. And time is the most precious commodity. So that's why I appreciate you if you're currently watching this right now. Um, okay, so look, we're still continuing that expansion higher. Okay, we're almost there. We're almost there. See that? And this is interesting, no? Because this is pre-FOMC. So I'm very what's the word called? Uh, kind of excited to see what we're gonna be watching at 2 p.m. here. Hmm. Let's take a look at more of what price has been up to. So we have our pre-market here. Oh, sorry, let's go back up here. Let's take a look at the pre-market session here. Pre-market is from 7 to 7:30. Interesting. So I see some liquidity here left over from the pre-market lows. Wednesday, sell side liquidity. Right? Let's see here. Mhm. Yes. Okay. And then let's look at the CME open. Right? CME open is at 8:30. We have more sell side here left taken. I'm sorry, waiting to be taken. So we have some sell side liquidity now that's being engineered. We have this low and this low. So we're about to see just what in the world is going to happen next. Wow, look how close we are, guys. And everyone was like, I mean, I've had friends that were telling me, "Oh, the stock market is down, guys. It's time to sell." And it's like, I kept quiet because I knew this thing was going to keep going up higher based on our higher time frame analysis, and they were all kind of like so panicky, like it's time to sell, it's time to sell. Like, no, man, it's just waiting. It's waiting. So it's going to be consolidating for what FOMC sentiment to come in. It's going to be consolidating because we just came from a national holiday weekend. It's going to be consolidating because price is moving on discount. It's trying to accumulate more discount pricing for it to expand. Like that's the reason why. I've been bullish still. It's been a very long months since it's been bullish since Thanksgiving. No, since the let's go back up. Let's zoom out a little. Look at the daily chart, right? Bullish since April. Why? Why bullish since April? Because look, this is the kind of stuff that no one talks about, right? And nobody's willing to show you guys their higher time frame analysis, right? So everyone's only here to show scalps, but I'm here to show you guys the higher time frame. I mean, look at this. Look at this reaction when it dipped down to this low. Isn't this a turtle soup? This is what I would consider a turtle soup short, down below a balanced price range. So this low here, based on January 2024, that low, when it was taken, that was high probability turtle soup. That was an extremely long position trade that could have been taken, right? And this low, I don't know how many handles low you have been setting your stop loss because I don't do position trading, but I was really aiming for this buy side liquidity from here. Okay, and along the way, price has been reacting like this. Look at this: expansion, retracement, you know, order block, expansion, retracement, expansion, retracement. It's just been going up. And this is what I was anticipating the whole year. Look at this, from the start of 2025 till the end. This high or this low are my external range liquidities. And either one of them is going to be tapped before the end of the year. Okay, sometimes it doesn't, that's fine. That means price is being held in consolidation. Why? To engineer more buy side liquidity and sell stops. Sorry, yeah, sell side liquidity as well. So it's just being placed on hold. That's time distortion. This is gonna be either tapped. And look what it's doing. Boom, we tapped December's high, which was the highest point of last year. Okay, so this whole time I've been just bullish. Okay, and look at how that little mini accumulation that was happening. This was a kind of a tough time to trade. Not gonna lie, in June, because there were so many times where price was just up and down, up and down, up and down, but it was just going through some form of mini time distortion. So it was being placed on hold before it could expand higher. And when it did, you know that. And why was it like this? Well, just look at the news. We were having tariffs on and off. We have bombs going off. So, I mean, there was a lot of uncertainty at this time. But now, towards the end of June, now we're having a clear form of direction because I want to stop myself there because I don't want to sound negative, but we see a clear expansion moving upwards. That's what I'm gonna say. So now what? What did I say? Tell you guys about July? Now July, we see a great expansion. Let's take a look at these seasonal tendencies, right? This is the S&P 500 seasonal tendency. You'll see again that July tends to be the best year for price to just rally up, no problem. That's kind of like where I'm feeling extremely bullish. Added to the fact that interest rates have been going up, dollar has been going up. Yes, dollar is rallying. Price could see some jitteriness, but all in all, it's still going to be a bullish month. I really do believe so. And it was still early, guys. This is only the first week of July. Uh, Sorry, I'm yapping too much. Yeah, this is only like the second week of July. We still got 3 more weeks up in this, so good, relax. You know, we still got plenty of trades going in, and this is only one market. So imagine if you start analyzing forex. Okay, where was I? Oh yeah, and it tapped. Shoot, I missed it when it happened because of all my yapping. Excuse me, guys. So let's take a look at the CFDs, right? This high comes at 22,899.4. The high of today, 22,901. 899. Not two handles. We tapped it. Nice job, everybody. So because we tapped it, what's price gonna do next? This is where I'm like, I don't know. Anything can happen. So because we tapped up to this high, it could still go up higher. Remember what we were saying? I still think so. Not directly, not right now. Because again, it's going to be met with some form of jackiness because the dollar's going up too. So it can retrace for a bit, keep going up higher. I doubt it's going to keep expanding up higher like that, but we'll see. We also have FOMC, so it could also just be direct to create new higher highs. I could be completely incorrect in my analysis, and it could treat this as turtle soup and then set down lower. Okay, I'm not in the know. Okay, so I kind of have to go on in there with my experience based on formations in the market, how it's creating highs and lows, projections, which I told you I suck at still, seasonal tendencies, which we have something of roadmap, intermarket analysis. Okay, so I'm just going off based on my very limited experience, which I told you was 2 years. It was a little more, but I mean, I didn't really start dwelling into this material until like my third year. But like, it's a lot of information, you know, and there's a lot of things I'm probably missing right now that I'm not sharing because it's to be honest, I think I just forgot, or I'm just like, you know. Let's see here. So we could start deleting this buy side liquidity. Let's do say hi here as well. Eventually we reached up to here, and look at the sell side that we've been generating. Low, low, low. So when price begins to do its sell side delivery, these liquidity pools will be very interesting for it. Places to target. Well, in the meantime, I'm glad that we caught this on stream. So you saw it in the beginning where I told you where I think price was going to end up going, and it's hitting. It's hit it faster than I expected, actually. Maybe I can clip that. You know what? I'm curious. Let's take a look at Forex real quick, right? Let's see here. Uh, no. We'll do. Let's just CFD. Okay, let's do this. See, because dollar has been rallying lately. Look at this downtrend from this high to this low. Okay, let's do USD JPY. Should be rallying up. Yep. All the pairs that start with USD should be rallying up. Should be, right? We got USD, CF Mexico. Okay, this was interesting. And I think I can cover that in a second. USD chip. Alright. USD CAD. Should be rallying up. USD, the GBP USD. GBP USD. Okay. That should be going down, makes sense. Dollar's getting stronger. We already looked at that. What's another one? AUD USD. Okay, that's another pair that is still with dollar, so should be seeing a downtrend. Kind of is. Look at all this craziness, my guy. This is why Forex takes a little bit more experience, in my opinion. I think future indexes have much more cleaner price action than this. This, you know, on top of the fills and the spread from your broker, this is challenging, especially to hold. I'm not gonna lie. Okay. Hang on, guys. Let me take a quick break. Now, what I'm looking to do here is, in terms of expanding the channel, is finding a way that I can clip these live streams so that when people come and they could just no, I can just cut it in the form of like short-term content, and I guess that'll be a way um, you can drive traffic to my channel. I guess I want to give this a shot. I wanna give social media a shot. I hate social media, but you know, gotta play the game. Let's zoom out for a bit here. Yearly perspective. Let's look at the weekly perspective. Okay, same deal here. Looking for this to fill. That filled. I mean, part of me is like, what the heck am I still doing here? Just cut the stream because we're not gonna find anything fruitful today. Like, the only reason I'm here is still some live streaming. So let's see here. What time is it? Is it really 10 o'clock? Wow. Okay. Yeah, it's already 10 o'clock, guys. Let's see what kind of structure we had here on the meter. But where is our first fair value gap? I really thought, I don't know why, I thought it was like 9:10 or something. Still waiting for market open. You'll see here that we had that big expansion when we opened up at 9:30. Wow, I really gotta get myself together. Let's see. We have MEQ. I guess I yapped too much. I lost my train of thought. Lost my focus. Okay, so MEQ. Gosh, I don't even know what to look at first. Let's look at our daily perspective. Look at the 9:30. Can't be it. 9:31. That's a good fair value gap. Only for quadrants. Just give me the premium opening. Look at the 950 candles. Okay. Curious if we'll see this as sell side. We're also now reacting off London lunch. No, I'm sorry, not London lunch. Excuse me. London close. Okay. Now let's take a quick look at our opening range gap, regular trading hours. Hide this as well. Don't gotta see this. Switch our trading view. Then we'll do this. We got Tuesday, Friday. Let's take this one. What are we seeing here today? So premium opening or discount open? Premium opening with a, let's get our ruler. 75. So this is prime for low resistance liquidity run. So we should see price just react quick, and it did. So our target. Okay, and then we have our section here. Hmm. We have our first percent fair value gap right there. Ooh, all the way down here. See that? Excuse me. So that's the AM session for y'all. We've met our price target kid hit. Be on the lookout for 2 p.m. So this could all just be excitement for FOMC. This could all be probably considered manipulation, you know. And then FOMC will start seeing price dip down lower for those sell stops, only to then what keep going up higher. Probably that's probably what's gonna happen. I guess the last thing I'll do with my magic trick is the balanced price ratio theory, right? So it's 10 a.m. now. How would I be looking at? What would I be looking at here? We'll be looking at the structure between 8 o'clock to 9 and 9 to 10. So here we have consolidation. We have a low to high. No, we have a high low. High low. Mm, I don't like that. Balance price. I don't like that either. I mean, everything's like overextended. You know, it's really premium right now. $10.15, right? Okay. I mean, there's nothing I'm looking for right now except this order block. This low, sort of longer, probably. It's something like this, so it's better. So if we divide this portion, this high to this low, take 50% of that, this is still considered discount relative to this high to this low. So, since I like turtle soups, you can probably see something like this happen. Or, because it's behaving in such a manner, let's see it in the let's see it react off equilibrium. Let's do quadrants. See, it just dipped to equilibrium right now. Let's see how it reacted here. Yeah, I mean low to high, low to high. Yeah, I mean, this here correlated. So I don't know. If you're chasing price, I think this would have been a good entry. Equilibrium. Give yourself a nice 40 stop loss. Since we're in new territory, new high territory again. Something like this. This is a type 1 daily range. I wouldn't anticipate price to chill here for much longer. How much time will you give this idea for? Let's give it till 10:30, 10:15. Sorry. By 10:15, it should be reacting off this external range liquidity high. If it's not, then what does that mean? If your idea is wrong. Okay. Let's see here. Let me refresh you real quick here. So the reason why I don't anticipate this turtle soup to be taken anymore and just price react off equilibrium is because think about it, right? We have the opening range gap widen, 75 handles, low resistance liquidity run conditions. We just breaking through new highs. There's excitement in the market. There will be little anticipation for price to retrace, make a deep retracement. Although it's still possible, because there's a lot of force pushing price up higher right now, equilibrium would be a good discount. This fair value for the market to dip down, go up higher. And again, we're only giving this until 10:15, so that's the time budget, if you will, in terms of holding on to this idea. Do we have silver bullet? Let's see. What will be the silver bullet? You can refer to this gap here. See how it's behaving inside those levels. Right? Where's discount? Down here. Okay. Now let me ask you this question. Where is the first fair value gap for this hour? Should be right there. How are we treating it? Looking down to it. Okay, closing above it. Sibby. This will be very interesting to look at in like the 30-second range. So, excuse me, 30 seconds. Yeah, 30 seconds. But chill. Hang on, step out real quick. Okay, so since we're looking at this structure right now, right? What else are we looking at here? It's 10:14 a.m. So there is a mini macro going on right now. From 10:13 to 10:18, there's a mini expansion that should take place, running to either buy side liquidity, sell side. I'm sorry, to liquidity or in an inefficiency. Here, 10:13. See that at the beginning? Made a high, lower. We should have been seeing this external range liquidity be met right now. It's probably still going down to discount. That's what I'd like to have seen thus far. It's 10:15 already, so it's time to go. It's time to go. Where? Up higher. If we're in this trade, I would anticipate this mini macro to carry this price to go up higher. Up until 10:18. If you had entered already, because we still haven't met that expansion yet, just to protect yourself, this would have been a stop, break even trade, and this trade would have been protected. That's what I mean. That's where I've kind of given myself this blue line. So that it's like a time of expiry. Um, Once we reach beyond 10:15, if it's still consolidating and not met our price objectives, break even. Just break even anyways because the time of expiration is up. if it had met external range before 10:15, set it to break even. That's kind of like the money management rules that I put myself in place. So we'll see what happens next. Well, I'll give it to like 10 and 20. If 10:20 anything happens, then I'm gonna close the stream. Let me know if you're enjoying it today, by the way. Okay, so since we see price dipping down back into our entry, I would count this as like a break even because think of the slippage, right? So we set our stop loss just above our entry price. When price did this wick right here at 10:17, that would have been a break even. Speaking of which, what would be the new uh, balanced price range that I would be referring to? Well, we have this low to high, and then we have a higher high, higher low. What do you think that means? We have a break, or no, we have a higher low here. Let's see here. Yep, I would refer this to as a breaker that must be met very quickly. Where did it go? Where are you? To 10:30. So from 10:15 onward, this would be the play. The moment it opened up, it should be met with sell side delivery quickly. Why? Because we have this balanced price range, and in the form of a failure swing, in the form of a breaker, sorry, going down lower. But since we haven't met that yet, it should just be met with sell side quickly, quickly, quickly. Down to here, down to this external range liquidity at 945. So that's kind of like the profit objective. So we can get rid of this bullish idea. I no longer, I will still, this will still be considered fair price, fair value price. But given the conditions that I've been telling you guys about, um, yeah, I don't think we're going up higher. So this is how I would trade in the hour, right? We're looking for this low to be met in the short term. This is a scalp. This is scalp ideas, guys. So Okay, what are we seeing? We saw a wick down to the balance price reach low. So as soon as it closed below it, I will consider that really bearish. It's like it's like a little shy, you know. It's peeking through it, piercing through it a little bit. What the heck? It's 10:20. I did say I was gonna stop streaming at this time, but I want to test something out here real quick. See that? Look at this. We didn't close above the high of that busy. Okay, but did we do it here? Yes, we did. So we're gonna go down lower. There is a very small, very small dealing range there. Now, I wish I could look at the seconds. There is probably a tiny dealing range you could have taken there. Let me check here. Now, fortunately for me, I do have access to the seconds, but I will have to see if I can get a picture of it. What is this? The 10:15, 10:08 to 10:13. 10:08 to 10:13. Let's see here. Okay, there you are. I'm doing this in a different account, guys, so I do apologize for not being able to share. But let me see here. Maybe we can see it like this. Okay. Wow, look at that, guys. All right. I'm gonna take a screenshot of this and see if I can find a way to send this to myself. Um, okay. Wow. Yeah. Why are we referring to this? Because look at that SMT gap. SIBI. This one closed higher than this one right here. Where is this? This one just like wick below it. So which one's showing more strength? US 500. You want to take your dealing range high, if bearish, to the highest point there. And where could we be aiming towards to? Let's see here. Darn. I really wish I could share the photo because this is sick. I'm very excited. Not just about where I'm seeing price going, but I'm just excited on overall like the knowledge. Like it's clicking. Something is clicking in my in the way I've been analyzing. But damn, sorry, I said damn, DANG. Let me copy this image. No, how can I send this to? Huh? What if I do this? Okay, and then do this. No. Okay. I thought. Shoot. What if I send it to myself the old school way? I'm gonna show you guys this and then just close the stream because I don't want to spend any more time here. Where are you? Where are you? There you are. Copy, paste. Look at that. This is the 30-second. This is the 30-second chart. No, 15-second chart. If we back out a little, where do we anchor this low? Where do we find that civvy, right? It was this. Okay. Let's compare what we see on the US 100 versus what we see on US 500. We're seeing that what price is having this civvy right here, and look at how it's reacting. Wick, sell. But look at here, wick, body's closing up. This is like SMT divergence right there. So we want to take the breaker one. So we're going to anchor from this low to this high. Look at the time, 10:08, 10:13. That's exactly what we have here on the chart. It's already 10:18 lows. Shoot, oh my gosh, 10:08 to 10:13. 10:08 to 10:13 high on MNQ. So this is futures now, okay? Look at what happens. Makes that wick close below the 25%. Don't feel confident in this candle. Look at the next candle. Stays there. You will still consider that close below 25. You take an entry, 25%. Stop loss, just a little bit over the high. Okay? Guess what do you see? Price dips up, going up. When this candle opened, it went up. Tap 25%, lower. Lower. See that? Lower. External racial liquidity. And now, as you were seeing in the live stream, it met price action. Before what? 10:30. So you still think the market is random? You still think that it's buying and selling pressure? I mean, this is, I don't want to sound like this guy, but like the way it just reacted off this, um, I was telling you guys, like, look, I'm looking for this low to be taken. And look at what happened before 10:30. That's how long I was willing to hold this idea. I mean, take it for what you will, man. And this is what I've been learning. And it's just a matter of gaining that confidence. Clean, clean, clean. I'm so glad that you were able to see this. Nice 2RR trade. How low can we go? Let's see, it's 10:30 now, so we have a new range to focus on. So this would have been healthy, just here. If you're really, I guess, anticipating lower prices, what were some liquidity pools that were left behind? Well, we have Wednesdays, all this. That's today. So we can cancel this. What candle is this? This is the 8:58 candle. So 54, 58, right there, which just so happens to be equilibrium. So do you think it's going to go down there? We'll see. Let's add a, can we add an alarm, please? Let's put up a little party celebration here. I mean, this is good. Like if it dips down to the CME open lows, and then we leave that buy side liquidity, FOMC can just whoop, keep take price higher. Right now, I still believe stock markets is bullish. We're just going out there down there to scare the weak longs. But what do I know, right? I'm just a small guy from YouTube, and I'm still learning. And again, like I say on my live stream, this is not investment advice. So this is just for entertainment purposes only. I'm not responsible for your trades. I'm not taking any trades here. I'm just saying ideas of things I would have gone, and I'm not even getting them into. I'm not even earning any paper money to this. So all I'm trying to say is that my hands are clean. Please, just this is just for fun. Now it's going in my direction. Now I kind of do want to see the price reach down there, CME lows. Oops, what's this? Wow, look at that 10 RR. Love to see it. And the way I look at sell entries are kind of like a slingshot effect. You want to hook yourself to the one that makes the highest premium, which we saw here based on this gap. The SMT on gaps theory or knowledge really came from another channel. I'll give him a shout out. It's Ali Khan. So he gave me ideas on how else to use SMT studies. Right, it's not just about making a higher high and other one positive correlated a high lower high. No, this can also apply to liquidity pools, but it also can be applied to inefficiencies, and that's where I got that inspiration from. Now, earlier in the stream, I was trying to give you guys an example as to how we can use that to support our case for price to keep going in a certain direction. And while we didn't find one in the morning, I did find one now, and it was that SIBI, right? That was the SIBI that I was trying to use now to support my idea that price is going to go down lower. And let's see here. And we saw that breaker form on the US 100 CFD contract, whereas on S&P 500, you didn't see that occur, right? It was wicked. It wasn't necessarily closing above the CB's high, but we did close above the CB high on the US 100. So that is like extra confluence. So we're going to anchor our B leg on our daily range. We have the A leg here. We mark it white. We have that A leg to that B leg. We want to mark that B leg to the one that's making the higher high close. So that's actual SMT because the bodies are the bulk. The bodies are the bulk of the volume. So closed above it. Okay, when I showed you guys in that 30-second range, 15-second time frame, sorry, how it closed below the 25%. But again, you would have had 15 seconds to get in. So that's a market order right there. Entry. And then look at that expansion lower. We met external range liquidity before the time 10:30. So we were acting at that 10:25 macro. So 10:25 started. We anticipate a new mini macro going on. The new mini macro will expand to inefficiency or liquidity. We had liquidity down here in the form of external range. Price expands 10:27. As soon as we close below it, set yourself to break even. Want to hold for more, or you could take profit. Want to hold for a full pull? Wait. 10:30 comes in. The macro ends around 10:35. So 10:35, the mini macro ends, and now we'll see if at 10:43, we'll see if another expansion lower takes place to meet the 858. So I guess I'm gonna go on mute and just see what happens. I'm gonna catch this on stream because if we catch this on stream, that'll be the third objective that we see happen on live stream. First one we called was to this high when I first started this live stream. Second objective I called was this low on that external range. And now third objective is looking to meet that CME open low. So if we're tracing price, what will be the new structure, right? So it's 10:40 now. So we'll be looking at 10:15 to 10:30. Okay, at 10:30, low, high. So this would be the new structure right here. This low to high is balanced. 10:45. So we'll mark our daily range from this high to this low. Are we going to trade down to equilibrium? Possibly. Okay, equilibrium. Set yourself a healthy stop loss. Since this is a scalp, let's try 20. Okay, and then where will we be aiming to? Down here. Okay, so the scalp entry will be 22.82 and a half. Where did this high occur? 22.811. Okay, so not quite. So we'll see if price is going to be going back up there for more buy stops so that we can sell lower. It's 10:42, so we're gonna wait one more minute for that macro to show up. Okay, so it's 10:43. That mini macro should start going up. Remember, either aiming for liquidity or an inefficiency. I wish I could stream some music, guys. That'd be so cool. Remember, we're selling. Why would we want to sell over here at discount? You want to sell it when it's on premium. $10.28 to $10.29. Yep, equal highs. Equal highs here. High, lower high, equal highs. That's a pretty good SMT right there. Alright, so it's 10:45. What's the new dealing range, right? So, the new dealing range is this. We got 10:30, sorry, 10:15. Okay. High, low. I'm still referring to this dealing range. Okay. And we're going to refer into this idea till 11. 10:30. We have 10 to 10:30 now, so we have what's being balanced? Low, high, higher, high. It's like a typical breaker. Where's the external range liquidity? Down here, which was met after 10:30. Okay. Now, where do you see an inefficiency? Right here, right? That's reasonable. Did we run up to that inefficiency? Yep. At what time? 10:46. Is that between 10:43 and 10:48? Yep. Yep. It's 10:47 now. These sell side liquidity still looks like a possibility. Let's compare this to what we see here on US 500. Same thing, high low. So they're working in conjunction right now. There's no cracking correlation just yet. Remember that 1050. 1050 is the goal, but remember what we were talking about yesterday. You have to set your lows a little bit higher than the exact goal, because again, this is CFD still. So every broker is going to have their own pricing on CFD. So you want to play things safe. If this was future, of course, by all means, aim for that 858 low. Okay, of course. Futures, more regulated. CFDs, play it safe. You're trying to make money, right? Play it safe. Aim just a little bit above it. That's what I'm doing. So if that's the case, set this aligned to our alarm right there. Notice how we didn't tap back up to fair value. This would have been nice. 10.66 RR. Crazy. We'll extend this low now. Anticipate retracement up to 75%. Head down lower. What does that align with? This should be. We also got this mitigation block. So, a couple of sensitive things going on around here. Wick above it. Didn't even get to consequent encouragement. Now, is this bullish or bearish? It's extremely bearish. We didn't even get to consequent encouragement. We just wick up there. So I anticipate speed. Speed where? I'm telling you guys, 858 lows. Hang on. Something's up here with my computer. There's always something going on here. Okay. Now we should be good. Oops. I'm feeling really motivated today. I think I'll make a video about this. I'm just wondering how. Like, how am I going to make this video? Showcasing all the three objectives that we've been calling for. We called for the newest high to be formed. We called for this low external range liquidity to be tapped into. And now we're calling for this low. This hit, man. So this idea is out. We're starting at 1050 macro now. We're going to keep expanding our dealing range lower. Okay, 1045, what's the newest dealing range? So we'll do 1030. High, low. 1015, 1030. Okay, we're still referring to this dealing range till the end of the time. I'm still referring to this dealing range. And now for those of you who are studying Ali Khan's YouTube stuff, what kind of dealing range would you consider this? Type 1 or type 2? I would consider this a type 1. We're about to enter New York lunch very, very soon. So now if I was in this trade, I can't tell you how anxious I would just feel to say, come on, just give it to me. You know? Just give it to me, man. Like right there. But you gotta be patient, man. You're not the one controlling this thing. It's someone else. You have to give them their time, not yours. And besides, you would have been taking partials along the way. When it made this new low, check that out, 1036, and it started retracing upwards again, this low here, when it comes back down to it, take a partial. Partial here, and now we're retracing up again. This is good. This is institutional order flow entry drill. Okay? What I would consider at least. Lay off the stress, man. Go do something else. Make yourself a breakfast, make yourself some tea. Okay, so I wish you guys heard it, but we hit our take profit on CFDs. Okay, so you would have been protected right now. Okay, maybe we would have left just one more contract, one more lot in there. See if it can go down lower. But we've reached our profit objectives, right, for this trade. Remember, we want to aim a little bit higher when it comes to the CME low. That's where we want price to go right now. So we want to take it down there ASAP, especially that we're in the macro right now. Okay, that's just for I guess cockiness, seeing how price is going to go down to those levels, and to show you that, well, you're seeing it for yourself. So regardless, this would have been a nice take profit from that high that we took there. Remember? Yep. So we're just going to see the last minute fireworks happen, see if it reaches down to that level. We're looking for 22,734.2. Okay. We'll see if it runs down to that level. We'll add another alarm. 22,734.5.2. Crossing down. Okay. And then once it rings again, then we'll have a message go out. Let's do a party. See that alarm? Where are we right now? Oh boy. There you go. CME lows met. I've been telling you guys and girls, watch those lows. Could be the next target. Alright. Now we're either going to see turtle soup here or a favorable SMT for price to go up higher. But look at the higher time frame. We made this huge retracement down lower. Okay, so we want to see the reaction for both currencies, the indices. See, we have that low, format 858, right? Lower low, low, lower low. Would have been awesome if we saw the US 500 make a higher low here, but it's probably not time yet. I still do think FOMC is going to make price go up higher. Well, we'll see. Wow, 3 objectives met in this one live stream, and you saw it from start to finish. Let me know what you think, and have a good one.